Recording in progress.
Okay, so I think we can start. We are already online. So hi everyone, and good to see you on our demo day, August edition. Now we do it every quarter because like summertime, not so active. Anyway, I'm glad to introduce today 5 different projects that I personally believe in. And before we start, I want to introduce our jury court. So we have several investors with us today. So first of all, Laura from Web3 Demo Day from London. It's like offline demo days. She helps a lot of projects with investment. Then Robert, head of research at Each Capital. We also have Mike from WTG, but unfortunately he's not with us actively today because he has some emergency. Anyway, like I love to see you all guys, and of course Matthew from building. He was really active on our last RWA day and asked a lot of great questions. So thanks guys to join us, and yeah, feel free to ask any questions to projects today. By the way, like questions can be also asked via comments on X and YouTube translation and here in the chat. And yeah, good luck everyone today. I think we can start. And the first project today is, let me check. So NICE protocol will be the first.
Yeah, I'm here. Nice to meet you.
Nice to meet you, Jake. Let's go. I will set up a timer for you.
I can share my screen, or I will.
Yeah, feel free to share it.
Let me. Okay, I should be sharing. First of all, welcome everyone, and nice to meet you. I'm Jika from NISA, and what basically we are building at NISA Finance is a market as a service for tokenized assets, where the user brings the asset and we build and operate the lending market around it. So the problem, the fundamentals of our core business is that specifically for tokenized assets, there has been used around $34 billion in assets, and around 90% of that sits, inside the wallets and is not productive collateral. And this is a great market opportunity because we are talking about generally collateral backed by real world yield that can generate a strong yield and can be in high quality collateral. And generally, this collateral is not used or because generally there is not enough infrastructure correctly built around that. So there is no price fits, there is no a liquidation path, and the mixed permissioning because some assets are permissioned, some are not, make it a little bit confusing for business to bring those lending market. And that's where we are sitting. We are sitting on this spot, and basically, what we try to introduce is a market as a service that we introduce for asset issue. So we introduce ourselves as curator, but what we do is a job that is much more than simple curators. Because what we do is we take we assets that are issued, and then we build uh, completely from scratch the lending infrastructure. So we take a bulletproof lending infra such as LRD2, Aave, Compound, Blend, Camino, wherever is the chain of the asset issue. Then we build a quantitative risk calibration. We define a specific liquidation execution path. We handle eventually the permissioned assets, and we run the market basically. One great example is can be measured here. So, for example, for compared to our competitor, we have much higher loan to value, and we have a scalable infrastructure. Um,
That's
and
3 minutes, so yeah, now we can start our Q&A
over.
session. Who would be first?
Well,
Hi, I can
oh, go
first.
ahead.
Oh,
Go ahead.
hi, I'm Lorraine, Web3 Demo Day Accelerator. I can jump in first. I missed the first half, unfortunately, but it'd be good to know more about what made you start this and what's your vision over the next couple of years.
Yeah, I would say that we started this because we are seeing a huge shift in the current DeFi landscape, where basically we are, in my opinion, we are bringing the trade DeFi into DeFi. So this is the measure Swift, and we do believe that curators and the infrastructures around asset issues that are bringing tokenized assets to DeFi are not doing enough, and we would like to fill exactly this gap. So we would like to build the correct lending infrastructure, which is a core primitive of finance, and we want to bring that to decentralized finance. The long-term vision is to deploy as many markets as we can on the best chains, and to make them all high in the total value locked and utilization rate, so that when we have enough markets available, we can build vaults on top of them, such as Morpho or I don't know, like Euler, but with the unique proposition that users are exposed only on high quality collateral market, and it can be also interoperable, so multi-chain.
Okay, thank you.
So I'm trying to grasp the problem and solution here, and I'd like to take a stab at the slide that you have in front of us here. So you say that Ondo Finance is a client of yours or maybe a prospect, something like that. Can you walk us through what that conversation sounded like? So if Ondo is a client of yours, they must have had some sort of problem that you're solving. What problem did they present to you? And then how did you talk them through your solution?
Yeah, sure. The problem that we present is specifically to Ondo Finance is that they do a great job in terms of asset issuing, and they are bringing a lot of tokenized assets, but they need to make these assets. They need to have more use cases built around those assets. So we reach out to Ondo or other asset issuers saying if they want to create to build new use cases around those assets, and of course lending is a core primitive of finance. So we want to build lending infrastructure around their assets, but they don't need to have a headache for that. They don't need to mind about permission and stuff. They don't need to mind about liquidation. They don't need to mind about curation of the market, so loan to values, liquidation thresholds, and these type of things. We basically curate everything. We say them, let's adopt this market as a service, and we take care of everything. From taking the assets to deploying the first market of that asset.
Thank you.
Can I also ask the last one? Basically, could you like briefly tell me why the potential like lenders or borrowers would go to your markets, but not basically, for example, not to Morpho where they're working on it a lot lately.
Yeah, the thing is that we are curators, so technically we are not on like Morpho competitors. We build on top of Morpho. So what we do exactly, I mean, the main reason they should go with us is because the first thing is that we build counterparty isolated credit markets. So every market is isolated from the asset issuer. For example, Ondo has its own market. Another asset issuer like Centrifuge has its own market, and so going on. The second thing is that even if it's counterparty isolated, we can guarantee a better liquidity across the market, because even if it's counterparty isolated, there is not an isolated market with a single pair of collateral and loan assets. So they share the same liquidity, and it's a huge benefit because a borrower of a given collateral can shares the same liquidity of another assets as collateral, basically. And the third thing is that we totally remove from them the headache of deploying a market, of create a market, of promoting the market. And also, we want to build great relationships with lending infra providers and price feeds providers, so that we can also have a great unique a great proposal in terms of marketing, partnerships, and networking.
Thanks, Giga, for this detailed explanation. I hope all questions were well covered, and we can move forward. So the next project is VS Protocol. Oh, are you ready?
All right, can you see my screen?
Yeah, we can.
Awesome, thank you. I am ready. Thank you so much for the opportunity.
Let's go.
All right, so VS Protocol versus Protocol is a game that we're developing. It's a game where skill pays off, as you can see there on the chat. So first of all, the problem that we face is that there's over 640 million people playing competitive shooters, and only a fraction of them ever get paid to do it. Everyone else buys the skins, grinds the ranks, and pays for the privilege to play the game. So our solution is that you don't have to go pro to get paid. When you win a ranked match, you get paid, and the prize comes already out of the players that played the match to enter. So the economy works and it still scales completely. In our other game mode, Extraction, you also buy your own ammunition. So every shot you fire is money that you put on the outcome. Now, on the Extraction is a game mode that we have playable today. We're building on Unreal Engine 5. It's one of 3 game modes. And the idea is simple. You drop onto a planet surface and mine. And while you're mining, storms come through without warning, so you have to get behind cover or you lose everything that you're carrying. Then, of course, the more ore you carry, creatures are drawn to your hull and they become more aggressive towards you. You also buy your own ammunition, so every shot you fire is money that you spend, so you can't just spray and pray. And once you're ready, you call the shuttle to extract with it. It takes 3 minutes and you have to hold your ground until it does. Now, if you make it aboard, all that ore is yours and you can convert it to fiat or crypto. And if you fail, it all goes back to the ground. Now, what this raid does for us is a finished game and a second way to pay for it. So it's multiple game modes and a collection that pays for the rest in the form of digital collectibles. And our business model is also quite simple. We take a percentage of every game we played, or every game that is played. With our projections, with 10,000 daily players, we will have an annual revenue of $8 million based off one game mode that we have in mind. So the way it works is match entries is one of the game modes, ammunition for the Extraction game mode, digital collectibles or NFTs in the crypto sphere, and sponsorships. So this is our team, myself and my co-founder, Albert. Albert has been developing games for more than a decade, and we've both been gaming for over 2 decades each. And as you can see on the right, there is some screenshots from our game, how we're actually playing it. So we already have 220 people on the wait list. We've got anti-cheat partnership that's really, really interesting. It has AI capabilities, and we placed 3rd place in a hackathon. So our ask is $1 million for 15% of the company. This is to take Extraction to release, build collapse, and put our first collection in players' hands. So really, really excited to answer your questions.
Thanks, Paul. 3 minutes is over. And yeah, let's start with the question, guys.
So I'll kick it off. Is the value in this, and it's a very interesting concept, kind of like poly market for video game matches, is the value here that you've built a very good game, or is it that you can monetize the games? And then I have a follow-up question for that.
It's a very good question, and it's actually both, because most games or Web3 games that I've noticed is that it's a glorified slot machine and you just need to grind all the time. So we are going for a fun first approach. And from the fun first approach, we get all the gamers to actually play the game. And then adding rails like blockchain technology, using it actually as the technology is intended for, we gave players a good way for payouts, for settling things and make it global.
Okay, so the value of blockchain in this case is that you have instant settlement of what you've earned rather than, let's say, like a credit system that a lot of games use. So in that case, would it be, because I'm thinking about your business model, and a lot of video games churn, they become obsolete, and so you really need to release games every single year for this to be persistent. Or you could build this mechanism into existing games or upcoming games. Do you think that that would be a heavy lift to leverage distributed games that already have millions and millions of players?
It is definitely an option. I wouldn't think it's a heavy lift, but I would say with this game, it could be the first proof of concept of a system. So it could piggyback off the users as a proof and then implement it into other systems as well.
Okay, interesting.
Thank you for the question.
Thank you so much for the presentation, Paul. I'd love to just learn a bit more about your onboarding process. Like, how are you bringing gamers in, your clients in, and where are they coming from, and maybe some numbers around your customer acquisition costs.
That is excellent questions. Thank you so much. So first of all, we've got three separate ideal customers. First is our normal gamers. Second is, of course, the crypto natives that's gaming. And third is your more invested type of people. So first of all, the Web2 gamers, or the normal gamers, as you call them. So they first learn about this game through either streaming or just our normal advertisements, or the game is completely free to play, except on ranked mode where the payouts happen. So we've catched them with the fun. Then we've also have a partnership with the Reality Network that has nodes that you turn on that can use your system's resources that gamers already have a lot of to actually generate funds for them so that they can enter and have the premium experience without having to pay anything. So a normal gamer won't touch crypto. They hate it. They don't like it at all. There's a big stigma. So, but if they play a game that they don't need to connect anything and they can see other people earning money out of it, then they would actually turn on a node to be able to get some money out of it, especially if they've gotten good. Now, your crypto gamers, there's a lot of games out there, but most of them suck. So the moment you put something into a niche group and it's actually of good quality, that attracts a lot of people. The third amount of people are people that have a lot of money, but they're not very good at gaming. So they would actually sponsor players that are good, pay for their buy-ins, hold the competitions, and then they would get a cut out of that. So there's three different ones. Most of them gets added through live streaming, because nothing gives you as much adrenaline as playing a game and knowing there's maybe $1,000 and people are watching live. That's just clip worthy. So yeah, that's great questions. Thank you, Laura.
Thanks, Paul.
Thanks.
Rush.
Great. I think really cool concept, Paul. You might have answered like part of it, but if I understood this well, like the prize pool was essentially coming from the entry fee, right? And you take a cut. So all in all, there would be a large chunk of players who will be losing money on aggregate, right? Now, does that potentially become a concern for like high attrition amongst gamers? Because if somebody is not winning for a prolonged period of time, let's say like 30 days, 40 days, that could actually impact your user base. How are you thinking about dealing with that?
So that's a very good question. I used to be a semi-pro competitive player. So the idea is to get it onto 50-50. So it's match-based ranking. And I would love to share some more, but I don't want to take more of the program's time. So if you'd like to find out more, you can get my details from Easy Market. Oh, well, yeah, from Daniil.
Thanks, guys. It was really great. By the way, yeah, I forgot to announce our fourth jury, your Rush. Thanks for joining us today, and hope to see more questions from your side. And we can move forward. And the next project we have today is Salarius. Jack, are you ready?
I'm ready, yes.
Let's go.
Is it visible? Oh, sorry.
Yeah, it was. It
I
was.
think I got it canceled. So here it is.
Yeah, it's okay now. We can start.
Okay. So, okay. Hi, I'm Jack Samatov. I'm an engineer, an inventor, an entrepreneur, and founder of Solarius. We build one-of-a-kind renewable energy monetization infrastructure to help solar panel owners earn more value from their generated energy. Today, solar energy producers face fragmented infrastructure, siloed solutions, and high verification cost and delayed settlement. The most underserved segment of the renewable energy certificate market is small to medium-sized producers, including households, small businesses, or schools with solar panels on garage rooftops. More than 1.6 billion worth of renewable energy certificates are lost every year and never even claimed. In fact, very few people I talk to even know about them. I had solar panels on my rooftop. I never knew who's taking my renewable energy certificates. However, this market is huge and it's rapidly expanding. The demand in this market outweighs the supply, and the arrival of artificial intelligence and the data centers also driving the demand for environmental commodities higher. According to international carbon action partnerships, the market reached 80 billion in 2025 and is expected to grow even further with the current energy demands, as you know what's happening around the world. Advancing the RWA markets helping a little bit, but helps with the marketplace and distribution, but there is no underlying infrastructure that solves it all. Solaris is the solution for that. It's one of rare projects solving real world problems by applying blockchain as a technology and the crypto economy. Our platform supports every step from solar panels producing and minting tokens, renewable energy certificates data being collected in real time, and tokenizing, and our mobile app allows the users manage their process from anywhere. By combining the crypto and environmental commodities economies as a dual economy, generate more than $50 million per year from only 1,000 producers. This is an interesting concept and it supports each other. We have fully functioning technology today. We went live on August 20 and already have 40,000 users on our network right now. We have a very active community. Today, we have live users, active solar energy producers, validator node network is growing, and 2 mobile apps available in App Store. There are 3 ways to invest. You can invest in infrastructure, buying shares, tokens, and validator nodes under very favorable terms, or you can invest into the safe agreement with the equity. And of course, you can buy our tokens at a 25% discount from September on our private round. The company has founded by technology specialists.
3 minutes are
With
over,
many
but
years in
I think
experience.
someone can ask you a question about the teams.
Absolutely. So I'm at the end of it.
Hey guys, who want to be the first?
Sounds good so far. I think obviously it's hard to kind of grasp the business model on such a short timeline. But just to understand more about your upcoming private round, how much are you raising, and maybe just understand a little bit about your token, your TG basically.
We are raising on a token itself $2.5 million. We raised previously $2.5 million on a seed round. This is our private round, $2.5 million for the token, and we allocated $5 million worth of equity for equity purchase if interested investors.
Okay. And have you got any investors currently in? So is the token pre-TGE?
TG happened on the 20th, and from September 1st, we'll start selling it on our website and on Launchpads. 3 Launchpads will start on the 15th. September 1 will start on our website.
I see. Okay, no problem. I might want to look a little bit more into the your token at the moment.
Yeah, it's been 3 years of development, and there's a lot to look into, and it's a lot of material we can present you with.
Perfect, thank you.
Yes, Robert.
Yep, I wonder what sort of value accrual would the token get compared to the equity, and like basically where the revenue would flow into.
There are, as I mentioned, there are 2 ways of revenue generation. Is actual token economy, as a regular token economy goes, and we are predicting in 6 months it goes 5 times the growth on the token itself. The simulations showing that. And then also there is economy of the environmental commodities. Per our research, 30 producers, 30 regular household size producer nodes will generate 1 renewable energy certificate per hour. And they can be sold from $50 to $400 depending on the different jurisdictions. It's cheaper in Europe, cheaper in some sunny states, but depending on the market. Like when it's tokenized, they're gonna go higher. So both of them together combined will create a revenue stream that can be shared with the producers and the validators.
But do you plan to distribute this revenue to the token holders?
No, token holders will meet the regular token economy will pursue. They can sell. There are certain investing, following all those rules in the smart contract. They can sell and monetize. But we will be incentivizing the growth of the network by buying off some of the tokens, buying off the renewable energy certificates from producers. That's what I mean by distributing.
Got it. Thanks.
No more questions?
Rush, maybe you want to ask something? Maybe.
Yeah, sorry, Jack. Quick question: how does the price that you have kind of listed, like per REC, like compared to some of the other like benchmarks, right? Like any of the unbundled RECs?
You're asking about renewable energy certificates?
Yeah.
Yeah, there are solar renewable energy certificates. Those are most expensive, and this is what we solar renewable energy certificates. They're SRECs, and the price is the $400 in Washington. Sorry, $400 in Ohio, $320 per renewable energy certificate. Solar renewable energy certificate in Washington, and different states go different from there down the stream. The most expensive is $400. It's per our research and a market analysis.
Right. I mean, I might be a little outdated on that, but I think what I remembered that like RECs were like typically in like single to double digits for a lot of the market. And then, yeah, there are some which goes to like hundreds and thousands as well. But is the median mostly like on the lower end of the double digits, or where does the median kind of lie?
The lowest I found was $5 in some jurisdiction. In some jurisdiction, I found it was $5. I think in Europe somewhere.
Thanks, Jack. Thanks, Yuresh, for the questions. And yeah, we can move on for the next project. And now my Brazilian friend with the project content. Don, are you ready?
Hey guys, how's it going? Yeah, let me just share my screen, please. Can you see my screen?
Not yet. Probably he will rejoin to provide access for computer, but let's wait 20 seconds.
Yeah, perfect start, guys. Sorry for everybody's time. Yeah, now probably it's gonna work. So sorry. Yeah, desktop will do the job. Now I think you guys can see my screen, right?
Yeah, we can.
Okay, yeah, perfect. Yeah, I'll have to improvise a little bit. Let's go. When you're ready.
We are, let's go.
Okay, hey guys, how's it going? I'm Lucas. People know me as Don. I'm here talking about a huge problem we're facing in Brazil right now. Brazil has one of the biggest customer debt in the world with the biggest and highest interest rate. We have 21% of Brazil's GDP going to interest rate for banks. And this is taking 30% of all the families' incomes in Brazil, with 82% of the families in debt and 81 million adults in default. There's a mechanism that helps this happen in Brazil. The mechanism is that a contract that works in Brazil for every single bank account, that when the money hits your bank account, the bank or creditor can take the money out of a bank account as soon as it lands. It's kind of crazy. In the United States, for example, you can go to jail way faster than you can can take the money out of a bank account. So we built an account, we built a product called Conta. Conta means account. That is a bank account without a bank. So Conta basically is a fully abstracted self-custodial wallet using local stablecoins for people that would never learn about crypto to be able to hold their assets, hold their income, and protect their income to decide what to pay first, right? So they receive the money, they can decide what they're gonna pay first, and without any bank or creditor taking the money or blocking their account. The app right now, it's actually running on real money. So you're seeing the app, it's connected right now, the app. And we've been processing already volume. We did this month in August, we're closing the month close to 150K volume of dollars with 850 users. So we already have users. We have a public ledger with all the data on chain. So you can track all the numbers. We are gross profitable. And nobody can fix this if not a company working on the crypto space, because banks rely on the interest rate business model to make money. And for the team that's fixing this, I was the previous CEO for P2P.me. I was the CEO for the company, early hire, where we built this protocol for privacy and self-custodial wallets. We managed to grow this for 15 different countries and bring from 40K volume a month to $4 million volume a month, and get backed by Coinbase Ventures, Moodcoin, and we raised $6 million on MetaDAO. The team, it's myself with Martin, developer from Chile. We've been working together for 2 years. We met in a gaming forum together, building products for gamers, and we are asking for $300K for a pre-seed round at 5% equity. That's a round. I'll be happy to give you any answers on your questions and hopefully show you a little bit of the app.
Cool. That were your 3 minutes. Love the idea, like to show the actual app. So guys, who want to start?
Yes. Great presentation, nice app. Did I understand or hear correctly that you said you raised $6 million already on MetaDAO?
This was on a previous company when I'm talking about my background.
Okay, I see. So you're looking to raise 300,000 for Conta. So what is the allocation of that capital? I mean, you've got good economics so far, it seems like, right? You're running this profitably, it's lightweight. Where's that money going? And ultimately, how much of that is go-to-market? Because this works at scale, it seems. So how do you get to scale with 300,000?
Yeah, let me give you a context. Before that, it's like we're doing a good traction with only founder content and word of mouth. So this 300K, we go 40% to the product. It's paying salaries / all the product costs that we have for building a better infra. So we're doing redundancy. We're getting different providers and stable coins to be able to have a better uptime. And 60% is going to growth.
And what is that growth strategy?
Oh, nice. Yeah, that's more than 3 minutes answer, but definitely we're already doing, we're getting a segment of people that are in debt. This is a huge problem that everybody's talking to. We have some strategies on place. First one is the content strategy. So if you see this what's on screen, this is just a singular post talking about how banks operate in Brazil from Conta account. We did like 500,000 views. So creating the content and distributing through the people that already understand self-custody and understand crypto. There's a network effect. They're bringing people from their family, their relatives, because they know people that are in debt and they know they can help with this technology. So this is happening right now. Also, we have an AI agent that is scanning social media for people complaining about the banks or for their money being taken. And the agent has a trigger to tax these people as soon as he finds it complaining on social media and bring them to contact. So this is something that is already tested, already running like soft, and we can expand that. And then we have ads, because we're talking about normies. So we have an ads strategy going where our type of users are working right now. So this is like the three main branches that we're going. We're going through network effects, and on the network effects, we're building this fund where people can do IRL events to tell other people how to save money, how to protect, how to pay better your debt. And they can submit this with AI agent that verifies this proof of work, and then grant them a grant for doing this event IRL, just like a super team earn.
Thank you.
Amazing. Thanks so much for the presentation, Don. This will be my last question to shoot off, but it'd be good to just get maybe some of your star traction figures or some of your star achievements, like what kind of really makes this project stand out to an investor in terms of traction?
Yeah, sure. So this is a 2-month project. We already have 855 users. We already made $1,200 a fee, and we're talking in its gross profit. So we have weekly active users that are actually doing using the app as their bank accounts. And we're talking about 81 million adults in debt in Brazil with overdue debt in default. So this is like a huge opportunity. I mean, we can bring this as soon as we validate this in Brazil, we can bring this to other emerging countries that have and face the same problem. So we have opportunity in the way that we build the architecture. We have opportunity to just connect a local provider and a local stablecoin in any other country, in any other emerging market. So this is a huge opportunity that we can build here the last bank account everyone will ever need. You don't have to sit on the regular banks to have a bank account and operate this anywhere in the world.
Amazing. And just in terms of governance as well, just really quickly, how is that looking right now in terms of governance?
Perfect. So my master's degree it's on the regulatory framework in Brazil. So we built this around the regulatory framework in Brazil, and we have this a whole architecture structure that we can adapt the regulatory perspective depending on the local stablecoin, the local provider. These are the points that are the risky points. So for us, it's very easy to adopt to any other regulation because we're already built to be regulator free, compliant. Sorry. And yeah, so for us, it's very easy. We are completely comply right now in Brazil regulations. Love your hair, by the way.
Thank you. It's a brand. I have to shoot off. Thank you so much, Janelle, and thank you.
Thank you.
Yeah, thanks for this pitch. It's a bit different from what we used to see, but like I love that. And yeah, let's move on. And the last project from today's cohort, it's EasyMM. John, your 3 minutes. You can start.
Hi everyone, how you doing? My name is John. I'm one of the founders of EasyMM. I have been in this space from an early age of Ethereum. We are the pioneers of ZK technology for Ethereum itself. I received the first check.
Can you share the screen, please?
Oh, do you want me to go for the pitch? I thought I was going to introduce myself first. It's okay. There you go. Uh-oh. It gives me error. Can you see the... No.
Not yet.
Huh.
By the way, while we are waiting, there is a good question from the chat on X, Don, for you. I will drop it right now.
Unsupported document, please select. It's not allowing me to share. It was allowing me before. It's not allowing me to share a PowerPoint. To be honest, very unusual. Zoom, photo, image, file, share, camera, computer. Very unusual. It's just giving me an error. Document type, please select an image or PDF. Let me see if I have a PDF file of this. My apologies, everyone. Hmm. Yeah. This picture. Ooh, that's very unusual. I'm so sorry about this.
You just had a screen sharing?
Screen sharing, yes, but it's not allowing me to share any PowerPoint. Is that a problem for the PowerPoint sharing? Because I could share it earlier on with someone else on Zoom, but here is not allowing me to share PowerPoint as a presentation.
Yeah, I think we should not waste time on that. Let me check.
What can I do?
The last
Can
pitch
you
from the
upload it
chat.
from your side? I've
Yeah, the
already
last
shared
pitch
it
from
with
the
you.
chat is actual, right? I can.
Yeah,
It's
if you
updating.
can share that,
Yeah.
I will be able to transact it or basically continue on.
Yeah, let me do it.
Sorry.
So let's.
I didn't know it was just a PDF. I thought you
Let's
could share
go.
PowerPoint. That's just one page. Yeah. One more. Yeah. Is that the one? Is that the first page?
Oh my God, it's automatic.
I think you got to go the other way around. My apologies. Sorry.
No worries.
Yep. That should do it. Thank you.
Let's go.
Hi, everyone. The opportunity. Bitcoin holds 2 trillion in value. IBVM turns it from a store of value into a programmable application economy. IBVM is very highly scalable because it makes something very complex accessible to everyone. Second slide, please. While other L2s have tried, fallen short, we know that. Also, we know Ethereum's proof of stake consensus mechanism created centralization fear. We know hacks, censorships, and flash tokens numbers are growing. Its own documentation suggests a 33% stake can turn Ethereum centralized. On the other hand, IBVM has taken a different approach. We bring together Ethereum-like programmability, Solana's speed, and Bitcoin security. We package thousands of transactions together, mathematically seal them with a zero-knowledge proof, and settle that proof on Bitcoin. Very similar to cargo containerization concept. Bitcoin verifies the seal, not every box inside the container, and everyone shares the cost. Third slide, please. Think of IBVM Shopify for blockchain. Instead of needing a team of developers, you can describe what you want. Our system can build, test, audit, and deploy your application in just a few clicks. Fourth one, please. The next one, sorry. IBVM Mainnet is live is no longer a concept, with more than 11,000 smart contracts deployed across major blockchains listed here. We are the Polygon, what it is, Polygon for Ethereum, we are for Bitcoin. The next one, please. Very simple revenue model, combine subscription and transaction fees with many utilities on top. Targeting 27 million by 2029 is very conservative. Next one, please. We have a very highly experienced team. Our traction is real. In 10 weeks, 288,000 wallets created, 11,000 smart contracts deployed, 300 ambassadors, and highly engaged community. The last one, please. We're raising $1 million to accelerate growth and list IBVM on major exchanges. We have already raised $1 million. Also received a 25 million token subscription from GM Group in New York. Binance due diligence passed and accepted by KuCoin and MEXC exchanges. Our vision is simple. What Shopify did for online businesses, IBVM certainly can do for blockchains. We're offering a very attractive deal, 25% unlocked tokens, and vested for 12 months. Who wants to be a part of our Shopify moments? Thank you.
For your 3 minutes. Awesome. So now we can move on for questions. Guys,
Please.
Okay, so let me start first. Can you share with us your current active users? How many daily average users and monthly average users you have?
Absolutely. We have around 30,000 daily users, and we have around 10,000 developers are developing on IBVM. We calculated around 300,000 plus wallets created. IBVM is on the urge of growing. We're hoping we get a VC on board to take it further, exchanges, and also in 3 years' time in NASDAQ. Thank you.
Cool. And what is the difference with you and Stacks? We already have
Stacks are using Clarity language. They are basically it's been working for about 5 years. It's only deployed around 2,500 smart contracts. IBVM since June last year, this year, sorry, have surpassed that number 4 times the numbers. So we have 11,000 plus smart contracts comparison to Stacks. Clarity language is the barrier for them, but also we use AI to develop. Think of us as a cloud for blockchains.
Cool. Any other questions, guys?
Sure. So let's unpack some strengths and weaknesses. It seems like you're doing a good job growing. What would you say is the secret behind that growth? And then do you see any obstacles in the near future, and how would you overcome those?
Absolutely. We have studied all the layer 2s in Bitcoin, and we know majority are failing. Botonics claim that they do DeFi and natively settle on Bitcoin. They were basically lying. They raised a lot of money, but they had to compete against ETF because they were wrapping Bitcoin. So instead of getting an intermediary, IBVM is settling on Bitcoin natively. We mathematically basically batching transactions, containerizing it, and sending it back to Bitcoin for proof. We have many utilities on top, such as escrow service. That is a novel escrow service in the world. You can write your own smart contract while you're making a deal with someone. You can put a timeline, you can put performance, you can put an agent, anyone you want. Either one of those people disagree, the transaction doesn't go through. The beauty is your fund stays in Bitcoin, 2 trillion, and you don't have to wrap it. You don't have to trust an intermediary. Your money stays at Bitcoin. What we do is we just lock it for a period until you're happy, until you receive whatever you wanted, and then transaction settles. So the difference between us and many other layer 2s is that IBVM mathematically just packages the transactions, send it instead of 1. You can package 1,000, 10,000, 1 billion. It depends how much you want to save money on Bitcoin settlement. At the end, populating on Bitcoin, Bitcoin does the finality. So if you're trusting Bitcoin for security, IBVM is your ideal choice. But if you're building a DeFi, you should choose IBVM, because no one can touch that money. Basically, it's the position stays on Bitcoin. That's our basically strength, what we've done. We're also have developed a multi-signatory wallet for enterprise solution. It's differs from others, as you probably know. Many others who develop Safe Wallet, the originated person can always withdraw. In IBVM, it doesn't happen. Everyone has to agree and vote for that particular thing to happen. So that's our strength. We developing with AI. Think of us, as I mentioned, Claude for blockchain technologies, Shopify in a Web2 solution. We are building the whole ecosystem around it. We also have a stablecoin rail that is going to be launched soon, a deepened solution that turns your mobile phone into a mining machine or micro server. This is all our strength. Weaknesses, we're young. We haven't had a big VC backing to grow and actually tell the world who we are. As you probably know, Polygon last week just did in one day 93 million in revenue. That's pure transaction value. IBVM can do that for Bitcoin. We're already doing. We're exactly the same as Polygon on Bitcoin, which you get instead of proof of stake, which is centralized roughly, proof of work, which is Bitcoin. You can test it, it's live. We've done a Quelt audit, it's passed. Everything we say is real. We also have deepened. A really big thing is coming is the stablecoin rail. It's a novel one, it's one-to-one, and it's gonna have to be run by the banking or financial system. We don't control that. They can test it. It's a reverse API solution. So that's what we said.
Thanks for the detailed answer. I think you covered even more. That was our demo day. All 5 projects that were presented today. Thanks a lot, guys. You did a great job, and I wish you all the best and success and good luck with fundraising. Hopefully, our investors also would love to join and contribute into your success. And thanks our investors and all participants to join us, to help us make this demo day better, ask really great questions, and see you next time. So thanks everyone. Have a great day.
Thank you, everyone.
Thank you.
Thanks, guys.
Thank you.